What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on PLTR ticker. And on today's video I will show you where we are on the price chart and how we get there. Then I will continue with the fundamental news and I will show you their earnings report and the presentation, and I will show you that this movement to the downside is nothing else but the temporary sell-off. And at the end of this video I will share my thoughts and my technical analysis, and I will show you what should we expect next. And before we get into all of that, if you guys would like to earn 2 free stocks with Moomoo valued up to $7,000, please check out that link in the description below. All you have to do is sign up for an account and deposit as little as $1. This is guaranteed free money. Full details you can see on the screen right now. So let's start with the price chart. I made my previous video right here at this point and I've told you that we were forming this channel, and it was a bearish channel in my opinion, and usually these channels break to the downside, and we have this breakout. And I have to say that for now we hit exactly the range of support that we hit previously, and it is $11.75, and we are now exactly at the same spot. So this range in my opinion might be a range of support for this asset, and I have to say that we were forming the bottom of our C wave, the entire retracement from its all-time high, and it is the bottom of our C wave. And right here I've told you that we might have one more small leg to the downside, because I was a bit confused about the fifth wave inside this C wave, and that's why for now I think we are almost done this retracement, and technically we might have this as double bottom pattern, and technically we might have next leg to the upside. So I will continue in my technical analysis in just several minutes, and let me show you the latest news. We are on Seeking Alpha, and this article was published on February 17th, and it's titled "Why did Palantir stock fall today? Q4 earnings miss hits shares." And let me quote you this. Palantir Technologies shares fell sharply on Thursday after the data analytics software company posted fourth quarter results that were mixed, with earnings falling short on Wall Street's expectations. The Alex Karp-led company earned 2 cents per share on $432.8 million in revenue, whereas Wall Street analysts were expecting 4 shares per share on $418.07 million in revenue. So they missed by 2 cents, and technically it might be one of the signals that a lot of paper hands sold their position. But in my opinion, you shouldn't worry about these numbers, because all in all, the results of full year 2021 are amazing. And let me show you this. So let's start one by one. Right here we can see the Q4 results and the year-over-year growth and margins. And the total revenue growth is 34%. And to stay in line with their forecast, they have to exceed the range of 30% in total revenue growth. And they follow the expectations. And government revenue growth is 26%. It's a bit low number, but I will show you in a minute why it is not so important. Commercial revenue growth is 47%, very good results. And US commercial revenue growth is 132%, definitely amazing result compared to previous year. And they have an adjusted operating income of $124 million and adjusted free cash flow of $104 million. Definitely very good numbers, and especially GAAP gross margin 80%. And previously it was only 77.5%, so they increase this number as well. Next one, full year 2021 results, revenue and margins. And right here you can see that their revenue growth is 41%, and this result is really amazing. Government revenue growth is 47%, and right here you can see that it is still very good number. Commercial revenue growth is 34%. Also, we don't have any signs of deceleration of this growth. US commercial revenue growth 102%. Adjusted operating income is $473 million. Adjusted free cash flow is $424 million. And the GAAP gross margin for full year 2021 is 78%. Amazing number, and I have to say that it is one of the highest number of GAAP gross margin among these type of companies. Next one, let me pay your attention on this quotation. The NHC's 2-year Foundry license is just under £25 million. By contrast, Test and Trace spent £155 million in 2020 and 2021 alone, and struggled to produce the desired outcome in what is a simple exercise. And this quotation was said by Nicholas Timis and Becky Byard, the King's Fund, excerpt from the COVID-19 vaccination program, online version, January 2022. And definitely this information shows how useful might be the Foundry. And this example alone shows that you can save up to 6-fold of your expenses if you will use Foundry. Definitely amazing information. Next one, total addressable market expansion. And right here you have to know that if the market is growing, definitely it is implying a huge upside potential for the companies that are working on this market. And you can see that for all of their products, we have consistently expanding their total addressable market. And this is also a very good sign. So next slide, commercial momentum. Commercial revenue growth year over year, and as you can see, we have acceleration of this growth for each and every quarter. Next one, let me show you right here, US commercial cohort growth, and it is very interesting information. So, as you can see, on 2018 they had $32 million of contracts that were made on 2017, and they made $7 million worth of new contracts. Next one. This $32 million became $19 million, so deceleration, slight deceleration. But $7 million became $10 million, and they added new $19 million in 2019. Next one, $19 million became $69 million, and $10 million became $15 million. Definitely huge increase, but we have the deceleration of the 2017 contracts. From $19 million to $9 million. Nevertheless, they added $6 million of new contracts. And right here, you can see that $6 million became $18 million. $69 million became $102 million. And $15 million became $17 million. And $9 million of 2017 contracts became $11 million. Definitely, this information shows us that they increasing their numbers not only by adding new contracts from new customers, but they have a growth on their existing customers. And that's why, in my opinion, it is extremely important point where the company can grow not only from the new customers, but from the existing customers as well. And let me show you their stock-based compensation, the most concerning number that we had for 2021. So right here you can see this line, stock-based compensation, and full year 2020 the total amount of stock-based compensation was $1.27 billion, and full year 2021 was only $778.2 million. So huge decrease in this number, and definitely in upcoming years we will see even lower numbers, because I made a video about this about 3 videos ago, that they won't have stock-based compensation for their top C executives for the next 8 years, and it is a very good sign. So I think you can take a look on this presentation by yourself. I will put the link on it in the description below, but let's continue with the technical analysis. And before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, as I already mentioned in my previous video, it is not the best point where you can add your medium-term position, because we don't have confirmation of new uptrend. But from the investor's standpoint, the range below $12 price point is extremely attractive. And I have to say that if you can add your position with this movement to the downside, your average price will be much more attractive, and in the long period of time, the return of your investment will be really massive. So I think from the technical standpoint, that's it for now. If you like my video, please hit the like button and subscribe to my channel with notification bell, and see you guys and girls next time. Bye!